Hey everyone, welcome back. Today we're diving deep into a company that's become a bit of a legend in the world of finance, Robinhood.
Oh, yeah.
You know, the app that promised to make investing accessible to anyone, no
Right.
matter how much money you had.
Uh-huh.
And you might even remember their stock price,
Yeah.
which has taken a pretty dramatic tumble, I think almost 60% down from its all-time high.
It's been a wild ride.
So what exactly happened?
Yeah.
Well, that's what we're going to unpack today.
Yeah.
From their really fast rise
Mhm.
to the controversies surrounding their business model.
Right.
Things like payment for order flow,
Yeah.
the GameStop frenzy,
Mm-hmm.
and of course the watchful eye of regulators.
Mm-hmm.
To help me navigate this financial maze is our expert,
Hello.
who can break down even the most complex financial stuff.
I'll do my best.
Ready to dive in.
Yeah, let's go for it.
Okay, so
It's really important to remember that Robinhood kind of burst onto the scene
yeah.
right after the 2008 financial crisis. People were really disillusioned with Wall Street.
Oh, yeah.
Protests were erupting.
Mm-hmm.
It was the perfect time for a hero, or in this case, a Robinhood.
Right, they swooped in with this whole image of taking from the rich, the big banks,
Right.
and giving everyday people a chance to kind of build wealth through investing.
Yeah.
And for a while, it seemed like they were succeeding.
Mm.
Like by 2018, they had 3 million users.
Wow.
And by the end of that same year, they doubled that to 6 million.
Yeah, that's huge.
Huge growth.
It was revolutionary. There's no doubt about that. They really challenged how things were done, the status quo with
Yeah.
their commission-free trading model.
Mhm.
And they basically forced other brokers to change too.
Right.
It opened up a whole new world for people who maybe felt excluded before because of high fees
Right.
or, complicated platforms.
Yeah, totally. But amidst all this excitement, some experts started to notice something kind of interesting.
Oh.
The average Robinhood account.
Was way smaller
Okay.
compared to accounts at the more established places like Fidelity.
Oh, interesting.
So it raised the question, are they really attracting serious investors, or was it more of a playground
Right.
for curious beginners,
Yeah, that's a really crucial point.
Yeah.
And it kind of leads us right into, the controversies around Robinhood's business model.
Okay.
Because let's be honest, free trading,
Yeah.
it isn't really free, is it?
Okay, you got my attention.
Yeah.
How were they making money?
So the answer is in something called payment for order flow, or PFOF.
Okay.
So imagine you decide to buy some stock on Robinhood, right?
Mm-hmm.
Now, instead of sending your order directly to the stock exchange,
Okay.
Robinhood sends it to a high-frequency trading firm
Mm-hmm.
like Citadel or Two Sigma.
Okay.
And these firms, they execute your trade
Mm-hmm.
and they pay Robinhood a fee
Mm-hmm.
for basically routing those orders their way.
Mm.
So they're getting paid by these big financial players to essentially act as a middleman.
Exactly.
That sounds a little questionable.
Yeah, it does raise some concerns, right?
Yeah. Isn't there a potential conflict of interest there?
Exactly.
Yeah.
While PFOF itself isn't illegal,
Mm-hmm.
a lot of brokers use it.
Yeah.
It does raise concerns are these high-frequency trading firms getting a better deal,
Uh-huh.
potentially at the expense of Robinhood's users?
Right.
And there's another layer to this.
Okay.
Robinhood was actually getting paid a lot more
Oh, wow.
for their order flow than their competitors.
Wait, why is that?
Well, remember the smaller account sizes we talked about?
Yeah.
A lot of Robinhood's users were first-time investors, and they were often placing something called market orders,
Mm-hmm.
which basically means buy or sell at the current price.
Okay.
And these types of orders are pretty easy for these sophisticated algorithms
Yeah.
used by firms like Citadel to capitalize on. They can exploit those tiny price fluctuations
Mm-hmm.
to make profits.
Oh, wow.
And Robinhood's order flow was, for lack of a better term,
Yeah.
a gold mine for them.
Okay, so now it's starting to feel a little less like Robinhood
Right.
and a bit more like, well, let's just say I'm starting to see why people had questions.
Yeah.
And then, of course, we have the whole GameStop saga,
Oh, yeah.
which threw all of this into the spotlight.
Mm-hmm.
Didn't Robinhood restrict trading during that whole frenzy?
Absolutely.
Yeah.
Remember in 2021,
Uh-huh.
a group of retail investors on Reddit
Right.
essentially drove up the price of GameStop stock,
Yeah.
which put a squeeze on some hedge funds that had bet against the company.
Mhm.
And Robinhood, along with some other brokers,
Right.
they temporarily restricted trading on certain stocks, including GameStop.
Mm-hmm.
They said it was to protect the stability of the market.
Mm-hmm.
but it didn't go over well.
Yeah, it sparked accusations of market manipulation and collusion with those hedge funds. Not a good look for Robinhood.
No, not at all.
What happened after all that?
Well, it triggered multiple investigations by regulators, and it really damaged Robinhood's reputation.
Yeah.
The whole situation raised serious concerns about whether they were really prioritizing their users' best interests,
Right.
especially those new to investing who maybe didn't fully grasp the risks. Yeah, it was a big deal. Yeah, it really shook people's trust in the platform, and rightfully so.
Yeah.
That GameStop situation really exposed a vulnerability, I think, in their business model, relying so heavily on, inexperienced investors.
Right.
Placing those market orders made them really susceptible to being exploited by these high-frequency trading firms.
It's starting to sound like they built their castle on a foundation of sand.
Yeah.
So is PFOF the only way Robinhood makes money?
No, not at all.
Okay.
They have other revenue streams like fees for margin trading, which is basically borrowing money to amplify your investment potential.
Yeah.
But that also amplifies your risk, of course.
Right, of course.
They also make money from interest on the cash deposits that their customers, hold in their accounts. And they have a premium subscription service called Robinhood Gold.
Okay.
Which gives you additional features and research tools.
So it's not just about PFOF.
Right.
But it does seem like those other features, especially like margin trading and options,
Yeah.
could be pretty risky for someone who's new to investing.
Yeah, that's a valid concern.
Yeah.
Attracting inexperienced investors and then pushing features that carry significant risk, has been a point of contention for Robinhood for sure. There was even a really tragic case of a young Robinhood user who took his own life.
Wow.
After mistakenly believing he had incurred massive losses using these features.
Oh my gosh.
It's really sad, and it underscores the need for investor education and responsible practices,
Right.
both on the part of these platforms and the individuals using them.
It's a stark reminder that investing, even when it seems easy and accessible, is not a game.
Right.
There are real risks involved.
Absolutely.
So where's Robinhood now after all these ups and downs?
It's been a wild ride.
Yeah.
Their stock price plummeted after that GameStop controversy.
Right.
They faced a ton of scrutiny from regulators. In fact, just recently, their stock took another hit, dropping 17%.
Oh, wow.
After missing revenue targets in the third quarter of 2024.
Ouch. That's got to sting.
Yeah.
Are they on their way out? Is this the end of the Robinhood story?
Not necessarily. They're still a significant player in the trading world,
Yeah.
Even with that recent revenue miss, they still reported a 36% increase year over year.
Wow.
With revenues hitting $637 million that quarter.
Okay.
And their earnings per share have actually improved significantly.
Hold on. Their revenue is up, but their stock is down.
Yeah.
That doesn't seem to add up.
Well, the stock market isn't always a reflection of logic or immediate performance, Yeah.
Investors are looking at the long game. And in Robinhood's case, there's a lot of uncertainty. The regulatory landscape is shifting, particularly regarding PFOF.
Right.
The SEC has expressed some concerns.
Yeah.
And is considering potential changes, which could significantly impact Robinhood's bottom line.
So it's like they're trying to build a future while standing on shaky ground.
Yeah, kinda.
What are they doing to adapt and stay ahead of all these challenges?
Well, they're not just sitting around waiting for the dust to settle.
Okay.
They're trying to diversify their offerings and kind of mature as a company.
Great.
They've expanded into international markets. They've brought in some experienced executives.
Okay.
And they're constantly adding new features to their platform. They're also trying to position themselves as more than just a trading app.
Okay.
Offering things like cash management accounts and educational resources.
So they're branching out.
Trying to attract a broader range of investors, not just the get-rich-quick crowd.
Exactly.
Smart move.
Yeah, I think so.
But they're not operating in a vacuum, right?
No, of course not.
What about the competition?
Absolutely. Competition is fierce.
Yeah.
Traditional brokers like Schwab and Fidelity have really stepped up their game, offering zero commission trading and more user-friendly platforms. And then you have this whole wave of fintech startups vying for their piece of the pie, each with their own unique selling point.
It's like a fintech showdown.
Yeah, it is.
So with all these hurdles and rivals, what do you think the future holds for Robinhood? Can they survive and thrive in this constantly evolving financial landscape?
That's the million-dollar question.
Yeah.
They were a true disruptor, there's no doubt, but their long-term success depends on a lot of factors.
Oh.
Can they maintain growth and profitability while navigating all these regulatory changes and adapting to the changing demands of investors?
Right.
It's a tough road ahead.
It's a tightrope walk for sure.
Yeah.
They need to appeal to their core users, those novice investors who are drawn to their initial offerings,
Right.
while also proving to regulators and more seasoned investors that they're a legitimate and responsible player in the financial world.
Precisely.
Yeah.
It'll be fascinating to see how they manage those sometimes competing priorities.
Right.
The financial world is dynamic and unpredictable.
Totally.
And only time will tell if Robinhood can really evolve and thrive.
So we've covered a lot of ground here.
We have.
Their meteoric rise, their controversial business model, and the challenges they face today. I'm starting to think that the Robinhood saga isn't so much a fairy tale as it is a Greek tragedy.
Interesting.
Full of ambition, hubris, and dramatic twists and turns.
That's an interesting comparison.
Yeah.
Their story is definitely a cautionary tale about the complexities of disrupting an established industry and the potential consequences of prioritizing growth above everything else.
It also highlights the need for all of us,
Yeah.
especially those new to investing, to really understand how the financial system works.
Absolutely.
We can't just blindly trust an app
Right.
with a catchy name and promises of free everything.
Exactly. Doing your research, understanding the risks, and choosing platforms that align with your values and investment goals.
Right.
That's crucial.
Knowledge is power, especially in the world of finance.
Couldn't agree more.
So for all our listeners out there, especially those who might be, just starting out with investing, what are the big takeaways from this whole Robinhood story?
I think the most important lesson is that there's no such thing as a free lunch.
Right.
Particularly in finance.
Yeah.
Robinhood's commission-free model was super attractive, but it came with certain compromises.
Right.
Investors, especially new ones, really need to understand how these platforms make money and be aware of the potential conflicts of interest.
Yeah. Don't be fooled by the bells and whistles or promises of getting rich quick.
Exactly.
Do your homework, understand the risks, and choose a platform that you feel comfortable with and confident in.
Absolutely. And remember, investing is a marathon, not a sprint.
Right.
Don't get caught up in the hype or make impulsive decisions just because the market is fluctuating. A solid investment strategy, a diversified portfolio, and patience, those are your best allies.
Slow and steady wins the race, or in this case, grows your wealth, right?
Exactly.
Okay.
So here's a final thought-provoking question for our listeners.
Okay.
What's next for the democratization of finance?
Ooh.
Will platforms like Robinhood continue disrupting the industry?
Right.
Or will those traditional players adapt and regain their dominance?
That is a great question. And how will increased regulation and, evolving investor preferences shape the landscape going forward?
Yeah, there's so much to think about.
There is.
It's going to be interesting to see how it all plays out.
Well, that wraps up our deep dive into the world of Robinhood. We explored their meteoric rise, their controversial practices, and the challenges they face today.
It's a fascinating story.
It is. Hopefully you gain some valuable insights into investing and the importance of making informed decisions.
Absolutely.
Remember, knowledge is power.
Yes.
And the more you understand about finance, the better equipped you'll be to navigate this complex but exciting world.
We encourage you to keep exploring the world of investing.
Yeah.
There's a ton of information out there. Keep learning, stay curious, and make those smart financial moves.
Great advice. Thanks for joining me today.
It was my pleasure.
And to all our listeners out there, thanks for tuning in to The Deep Dive. We'll see you next time.